everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, always keep in mind that there's risk involved with each trade that you take. I think we all understand that. So no trade is guaranteed to profit. You want to manage risk in a way that makes sense for you. And what we go over shouldn't be taken as financial advisement, but is coming from an educational perspective. Now, with that said, we will go over the risk management tools within the order window that exist in our web trader and our app that helps to make the risk management side of things quite a bit easier. If we simulate a trade or two, we'll be able to use those functionalities to show how easy it is to understand how much you're risking with different trade sizes and trade setups. Now, to get into our web trader platform, you just log in from our main website here, and that allows you to trade on and switch between both MT4 and MT5 accounts from one location. And all of the tools that you see us use within the web trader, all of that's also available in our app, which functions the same way. So if we log in here in the upper right-hand corner, we'll be in the web trader platform. I think a good place to start with the fundamentals today would be announcements that already occurred. I have the Great Britain pound JPY chart up for a reason. A couple things have been going on really to maybe understand why this might have some bullishness to it from a fundamental perspective. Number one, there's been a lot of optimism this week about potential rate cuts in the US. Markets have been reaching all-time highs on some of the major indices, etc. And then specifically out of Great Britain, if we look at the economic calendar, and keep in mind the Japanese yen tends to strengthen when there's fear and weaken when the markets are rising. It's not a 100% relationship, but there is that tendency there a lot of times. So if we expect optimism on the markets, you tend to want to pair a currency that you think will strengthen maybe against something that might weaken during optimism, which would be a safe haven currency like the yen. Like I said, it's not 100% foolproof, but usually the yen is strengthening up when there's a lot of fear and maybe giving ground up to other currencies when there's a lot of optimism on the markets. If you're factoring out, announcements directly out of Japan. Now, from the economic calendar, we can see on today's date, if we click, make sure we're on the 14th, announcements that just came in out of Great Britain. The housing data was not as expected. It actually was a little worse than expected, but it was already expected to drop. It just dropped a little more than expected, which by itself, I would say, then there's bad news out of Great Britain. But if we then look at some of the more focused on announcements like GDP, certainly analysts and traders really focus on GDP numbers because it's a true reflection of the entire economy. And so when we look at the GDP growth rate, excuse me, whether we're looking year over year, quarter over quarter, or month to month, we can see the year over year was expected to drop from 1.3 to 0.7. So the growth was expected almost to cut in half, which was bad news type expectations. And what we saw was it almost stayed the same. From 1.3 came in at 1.2. So that's a huge number coming in on the upside, better than expected on the GDP year over year. Now, if we then look at quarter to quarter, it was expected to drop from 0.7 to 0.1. That's divided by 7. It was expected to go down. And instead of coming in at 0.1 quarter over quarter, it came in at 0.3. So again, whether we're looking year over year or quarter to quarter, the GDP growth rate did not drop nearly as much as expected. And then, and if you don't understand GDP, it stands for gross domestic product. Okay, it's a reflection of the economic power, basically, of all the business that's being done in the country. And so then if we go down and we look month over month, GDP growth rate, it actually went up. Okay, so yeah, year over year it was down, quarter over quarter, but the most recent month, month over month, shows instead of the prior month dropping negative 0.1, and instead of having the expectation of coming in just barely above that at positive 0.1, it actually came in at positive 0.4. That's 400% higher than 0.1, which was the expectation. It's 4 times higher. Okay, so 0.4 might not sound like much of a number, but it's actually significantly higher than 0.1. Okay, 4 times higher. So whether we're looking month over month then, or quarter to quarter, or year over year, all of those numbers came in much better than expected, and actually showed a turnaround from last month to this month, where there's actually an increase in the growth rather than a decrease. So that's pretty solid for Great Britain there with that GDP data. Now, then we go down and we can look at some other numbers. These are not deemed as high influence in terms of how it affects the strength of the pound. Business investment dipped a lot more than expected. So there's a little bit of a negative, but it's not looked at with the same focus as GDP, which is called a high level announcement. But then we also have more good data down here as well. So manufacturing production came in much better than expected as well. So the revised number from the last month was actually negative. Manufacturing production dropped. Then the expectation was to come in at 0.3 increase, and it actually came in at 0.5 increase. Again, significantly better than expected. So whether it's GDP data or manufacturing production, these numbers were coming in better than expected. And I think I skipped one here. Industrial production up here also came in better than expected. Okay, rather than the big drop it had the prior month, and rather than just a 0.3 increase in industrial production, it actually increased month over month by 0.7. So we've got GDP better than expected, industrial production better than expected, manufacturing production better than expected, all out of Great Britain. Okay, so with that said, then you might say, well, let's take a look at the pound and see what's going on. If we look at Euro GBP, let's click on the chart for that. We see there's a signal right now to sell the Euro GDP or GBP, which means the expectation here is the pound will strengthen. Now, does that make sense with the fundamental news we just looked at? I would say yes. Better than expected GDP numbers, better than expected industrial numbers, production numbers, etc. Sounds like this signal is in line technically with what you might expect to see from a fundamental perspective. And this is how I recommend that you use the signals on our platform and in our app. Don't just blindly follow the signals. Check the most recent fundamental news and then check the signal. And you might already have an expectation before you look at the signal that, hey, this should be telling me to go with the pound. And sure enough, we click on Euro GBP and here it's saying go with the pound to pull down the euro. Okay, because the pound's listed second in the pairing. So then going down means you're going with the pound here. So it looks like the signal has not reached the take profit zone yet. So if you wanted to act on this, you absolutely could. And from a fundamental perspective, it might make sense. Okay, so if I'm looking at this setup, maybe I need to go to a little larger candles. 1 hour will give me maybe a little better view. It's certainly a downtrend. I can see that. It came up in the last hour to give you a better entry point. So it looks like this setup could make sense. So if I'm going to sell with this signal and with the fundamental news we just looked at, now here's where the risk management part becomes simple. Okay, I can start to draw my lines. I could have taken my exit point from the signal, or I can look myself and I can say, here's the downtrend. Once it gets past this point, there's no support level on the screen. So I need to go to maybe a larger set of candles, 4 hours, and I start to look over. And again, there's no support level here. There's nothing in recent time to stop this from dropping further if it breaks below this spot. So I need to go to 1 day candles now to see if I can find where's that next support level. And now I can see the 1 day candles had resistance here, okay, in the past, which then once it got above, it became support here. So this is maybe a spot where I would think to take profit if I was looking for a longer type move. If I'm looking for a short-term move, then it would maybe be just at the bottom of this wick. Okay, I'll go with the bigger move because that's pretty big news, the GDP data and all of the other data that came in better than expected. So I might be looking at 85.75 as a take profit, or maybe just above that, so 85.78. And then my stop loss, let me zoom back in on the smaller candles. My stop loss is probably just back above this last wick. If it comes above here, if it comes back above this wick, then I'll probably get out of it. So 86.10 maybe up here could be a good stop loss to be assured that you might have a reversal if it goes up there, maybe a little higher, 86.12. Okay, that's 86.12 is here. Okay, so if it goes up and hits this red line, then this downtrend reversed itself, and I'm happy to get out of the trade. Otherwise, I'm going with the signal and with the fundamental news. Now I can see my setup has a ratio with my take profit where I chose to put it just before the 1 day candle support level that we saw, and my stop loss up above these pivot points. So that is set up based on the technical analysis. Now I see my possible profit and risk with that setup. So 5,100 plus potential profit, less than 2,000 possible loss. So it's a nice ratio. If it does carry out and win, I'll make a lot more than I'm risking. But maybe I'm not comfortable with 1,800 risk. Maybe I want to risk, I don't know, 500 a trade or 600 a trade to be around 1% of my balance. And if that was the case, then now I need to adjust my trade size. So maybe I come up here and put 2 lots, and let's see, now I'm risking 236. Okay, I could go 5 lots, and now I'm risking a little over 600, which is about 1%, a hair over 1% of my balance. Maybe I'm comfortable with that risk and potential profit over 3%. Okay, so when you're setting up your trade, have in mind how much are you comfortable risking per trade, and then adjust the trade size. Once you have your stop loss and take profit set, then you adjust the trade size to be at the risk level you're comfortable with. Okay, and then once you're ready to go, you set your trade in motion. Okay, and this looks like it's ready to try and surge down. The momentum seems to be downward. Why? Because of the fundamental news that we just looked at. That's why there's such a downtrend on the chart. Okay, we'll see if that carries out, but we'll see. We're just getting started on the trade. You can monitor your trade and make adjustments to your stop loss and take profit very easy. I can drag my stop loss up and boom, I just reset it or bring it back down to wherever I think it makes sense. Okay, so I've got my stop loss just above this resistance level here. And so I can adjust that at any time. And I can zoom in, go to the smaller candles to help myself if I want to adjust the stop loss at any time. Okay, so just with a click, and the same with the take profit, I can drag it up or down, get it to a spot that I want. Okay, you also can do partial closes from this area. If let's say it was in profit to a level that makes you happy and you want to close half of it or some fraction of it, you simply go to this area. Oops, yeah. Click exit. And now before I close the position, I can change the lot size. So maybe I want to close 2 lots of the 5 lots to pocket some of the profit. So I would change this to 2 and then close the position, and it would pocket that amount of P&L, in this case L, because it started out bouncing a little bit. But whatever amount of profit or loss is showing, that's the portion that you're closing with the lot size that you're choosing. Okay, with 3 lots, with 1 lot, it adjusts and it'll close the commensurate proportion of what's showing in the P&L and leave the rest of it in the open part of the position. Okay, So very simple to manage the trade as well once you've opened it with your risk managed setup. Okay, so that's an example of trading off of announcements that have already occurred. Now, we can go back to the economic calendar, and I can show you how to trade on announcements as they come in, meaning analyze what have the movements done in the past, and as the numbers come in, react to it. So if we look at initial jobless claims, they're coming up soon out of the US. It's a high importance announcement, so you expect a lot of movement maybe on US dollar pairings. So we can analyze, well, based on how these numbers come in, how has the US dollar strength reacted in the past? And so if it comes in higher than expected or lower than expected, what does that mean for the movement and strengthening or weakening of the US dollar against other currencies? What has happened in the past? And that can help guide you on what you'll do now. So keep in mind, these are jobless claims, meaning bad news if this number is higher than expected. It's not job creation, it's basically job loss. Initial jobless claims means more people lost their jobs and are filing for unemployment benefits. So if this comes in lower, that's good news. If it comes in higher, that's bad news. So let's see what has happened in the past. We'll use this volatility tool. We'll look at the movements for whatever currency pairing we want with the US dollar. I'm fine leaving it on Euro USD. We can look at different time frames after those announcements. I'll leave it on 4 hours for now. And then we can qualify, how did the announcement come in? Above forecast was bad news, right? Means more people applying for jobless benefits. If it came in that way, what happened the majority of the time? It happened 3 times, and 2 out of 3 times the euro went flying up against the US dollar in the 4 hours after. Only once it went down, and it went down very little. If you look at these 3 times that it came in with these numbers higher than expected, about 95% of the movement is up. Very little red, 1 that went down, and when it went down very little. And the 2 that went up a lot more on average than the 1 that went down. So it looks like you were very safe in the past. If you'd have bought on the Euro USD as these numbers came in higher than expected, you'd have had a much larger probability of profit than loss. Okay, so yeah, 67% of the time it finished up, but even more so than the 67%, about 95% of the pip movement ended up upward after 4 hours with very little downward movement. Now, what if you say, okay, yeah, but that's after the numbers came in, you're going to miss the movement. Well, you know, the average range movement here was 69 pips. It tells you that here in these 4 hours. If in the first 5 minutes you would have placed your trade, you see the average movement was 16 pips. So these movements, this one was only at 12 pips, this one was at 19 pips, okay? And this one was at 10 pips. And this is the one that ended up down slightly. So maybe you lost 15 or 20 pips wherever you put your stop loss, but these you'd have gained 40, 50, 60 pips in profit, okay? Based on how these movements went after the first 5 minutes. And by the way, it doesn't take 5 minutes to place a trade. You easily could have gotten in the first 30 seconds once you saw that the data came in worse than expected. And maybe you would have caught a spike down on some of these and got an even better spot in the first minute or 2. Okay, so keep that in mind as well. This is worst case in the first 5 minutes. This would have been your entry, which is only 10 to 15 pips up. And then after 4 hours, this one was up 72 pips. This one was up 13 pips. And this one was down 4 pips, 3.5 pips. So here you'd have had 13 pip loss. And between the 2 of these, the second one broke even after 4 hours, and this one went up 70 something pips. So in combination of these 3, you have over 50 pips, or about 50 pips on average profit. If you entered after 5 minutes, and you probably could have entered sooner and even had better entry points. Okay, so very interesting and useful information here coming from this tool on our economic calendar that allows you to put together a trading plan that, okay, if this comes in above forecast, I'm going to try and get a trade off if I like the entry point in the first 5 minutes, get a trade-off to buy on the Euro USD with my stop loss maybe about 20 pips down, because that's what it showed the negative movement was. And my take profit on average maybe 30 or 40 pips up, something like that. And that trading plan is devised from what we saw from the past announcements when it came in above forecast. And you could try, this announcement comes in week after week after week for different countries as well. You can try that strategy 10, 15, 20 times and see in the end, did I profit from those trades? You're not going to win every time, and don't judge it on the first try. If the first try is unsuccessful, it doesn't mean it's a bad strategy, okay? You want to try it multiple times and see. How do you do on certain announcements? Maybe some are better than others. GDP announcements, CPI data, PPI data, production numbers, housing data. You'll find that some you'll be more successful than others, and then those are the ones you can focus on long term. Okay, what if this came in below forecast, which is good news? Then look, the exact opposite. Okay, more went down than up. But what I see here is, yeah, it's a higher percentage down, but the size of the movement isn't so drastically bigger than the ones that went up. Okay, it's almost 50-50. We had 4 up and 5 down, and the upward ones are almost as big as the downward ones. So in this case, if this comes in as good news, meaning less jobless claims than expected, I'm probably not trading. I'm not interested in trading based on what I see here. But if this comes in above forecast, now I'm interested to trade. It looks more of a dramatic reaction when there's bad news than when there's good news, okay, with this announcement. So that's how you can analyze which announcements you'd want to trade on, and maybe only in a preferred direction if it comes in a certain way. Any questions, comments? I'll pause for a moment. Okay, and if I see questions pop up, I'll address them as I see them. So using the economic calendar, just to summarize, we've gone through a couple different strategy ideas. You can trade off of announcements that already occurred, maybe combining whether it's good news or bad news for a certain currency, for a certain country, with our technical signals to see if the signal makes sense, okay? Then you can also wait for announcements that haven't happened yet, and already have a plan based on the past movements using these tools, already have a plan for which way you trade, how far your stop loss and take profit would be, what the percent predictability is, depending on how the data comes in based on how it came in the past, okay? And so 2 different strategies on 1 economic calendar. And you each weekend could analyze the upcoming announcements for the week and already know each day which announcements you might be available for in your schedule that look like they have a high predictability from the past, and then trade those announcements if you wish, okay? So a couple fundamental strategy ideas from the economic calendar. Now, where else can we look for trade ideas? From the fundamental side of things, we can go to the Market Buzz. So in our Market Buzz feature, and by the way, I think some of these features are only active on live accounts that are funded. So if you're working on a demo account and you're with us without having a live account yet, don't get frustrated if some of the features aren't fully functioning. When you fund your live account, then everything should be working perfectly for you. Now, in this area, we have a pictogram that is showing us what's trending the most online. The larger the circle, the more mentions are found through social media and articles and news websites, etc. Okay, so a lot of the normal culprits here, NVIDIA, Tesla, but then there are others that just out of nowhere might pop up as trending. And you can check out not just stocks, you can check out cryptocurrencies, what's trending the most, find the most recent articles regarding them, commodities, etc. Okay, and so I tend to find the most useful articles on stocks. There tends to be more information about them that I find can influence my trading, but you can search any instrument and see what is the most recent news. If I look at NVIDIA, for example, No surprise they're in the news with all the AI boom that's going on and the chips that they provide for AI. We can take a look and quickly find the articles that relate to it. Okay, NVIDIA partner Hon Hai sees AI server sales more than doubling. Well, that sounds positive. If it's a partner, it means if they're doing well, that's helping NVIDIA do well with their bottom line. So you might want to read that article. Here's a summary from Bloomberg, or you can click and read the entire article, okay? And make up your mind for yourself straight from the source. Does this information help me decide whether I want to buy or sell on, in this case, NVIDIA? Okay, so I already have a technical signal here within the market buzz that says price may rise 8%. So they're recommending, if you click on this, they give you the technical signal here with the support and resistance levels. They show you where you might want to take profit, and they explain the technical analysis behind it right below the image. Okay, so the technical signal is here saying buy, and the question is then, do the fundamentals support that? And if you start seeing articles like this that seem to be good news, then you say, okay, overall there seems to be positive market sentiment this week in general, new highs being reached on the NASDAQ and the S&P 500, etc. Now I have positive articles about NVIDIA that I can read through perhaps, and maybe I scroll down to see if there are a couple more positive stories or not. And then I also, on top of it, to top it off, have a signal that it's predicting that it will rise, and it's actually giving me the support levels and the take profit suggestion. So as I put the fundamental news together then from the market buzz with the greater overall news from the economic calendar as well, and that's creating maybe optimism on the markets. And then I look at the technical signal saying buy, maybe that's enough to convince me that, okay, I'll trade on this. So now I have a third strategy without ever leaving our platform or our app. By the way, all of this is found in our app as well. You can make decisions here in an informed way, whether I wanted to buy or sell on a particular instrument, or in this case, a stock. We'd have to wait for the US market to open in a few hours before you can trade US stocks, but you might pull up a European stock, or you might pull up a commodity that's tradable right now and find information about it that will make you make a decision, perhaps even right now, to make a trade, okay? The last step of that then, if you decide you want to trade on something based on something you read in the market buzz and from the signal that shows, if you decide, yeah, I want to buy or sell on that, when you go to the chart, then you do the technical analysis real quick, which means draw some lines like you see in the signal, or use the signal. That's best if the signal is there like we saw in the market buzz, or the signal is here and you start to look at the signal. That can help you with exactly where to enter, if you want to enter right now, or if you want to wait for it to come back towards the resistance level. That's the last step of placing the trade. So the fundamental news is helping you determine the direction you want to trade. And then a little bit of technical analysis helps you decide where you want to enter and exit once the direction is determined, most likely by the fundamental news that you've read through. Okay. Any questions, comments before we end things? I think this is a good place to stop and let you all go after some of these announcements and stories to start trading. I'll pause just for a moment. Okay, I must be clear. I don't see anyone was dropping out. The attendee numbers stayed the same, so it must have been interesting enough. But I don't see any questions, so I must have been clear. Nobody is confused about anything, so great. Thank you all for attending. Good luck with your trading the rest of the week. I do see a lot of opportunity with these upcoming announcements today, and keep your eye on the headlines. Obviously, with the tariff news, we could have a new headline at any time if Trump and name your country get into some argument or some agreement, hopefully, with regarding tariff decisions and trade agreements. That could always come out at any time. So manage your risk on any trade you're taking in case an unexpected headline comes in that regard, and trade with what you know. with what you know already happened with the fundamental news, like we looked at, and hopefully that improves your profitability. I do see a question that popped up. The PPI announcement today, let's take a look. There's a question about PPI. Let's look at the economic calendar. Which country? PPI data for which country? I'll try and find it. Oh, it's out of the US. So the reason I focused on the initial jobless claims is because I've found in the analysis greater predictability and focus on the initial jobless claims. When the PPI data is at the exact same time as the initial jobless claims, sometimes it can get drowned out by what's being focused on more. So if this comes in above forecast, in this case, there's strong data saying that the USD weakens, okay? And that kind of, in my mind, makes sense, because if the PPI data is above forecast, meaning the pricing index is higher, that means there's inflation. And if there's inflation, that means the USD is weakening. That's what inflation is. It's when your currency weakens and you need more of it to buy something. The prices are rising, so any one of that currency is weaker in that case. So if this data comes in above forecast, it makes sense here that the euro would climb, okay? And if this comes in below forecast, it's more cloudy. It's 2/3 up and 1/3 down. So when the data doesn't make sense like this, it makes sense to me that if this is above forecast, okay, this goes up. But why, when it's below forecast, it also goes up more often, 2/3 of the time? And the answer is the market's not focusing on that announcement as the driver during this announcement, okay? What else is occurring at the exact same time that when this comes in below forecast, it doesn't cause the USD to strengthen? Why might that happen? Because at the exact same time, the initial jobless claims are coming in. They're competing with each other. And so when you see that the PPI, regardless of how it comes in, it goes up. The Euro USD went up in both scenarios. That tells me, okay, if it comes in above forecast, maybe I'm interested because it went up every time. If it comes in below forecast, I don't trust that statistic that it'll go up, because something else is driving that movement. It goes up regardless of how this came in. When we look at the initial jobless claims, it's not like that. Above forecast, USD weakened, euro went up. Below forecast, USD strengthened, pulled it down, okay? That's more of a one-to-one relationship, and that tells me the market is focusing more on this announcement because it's reacting in both directions like you would expect. So this one seems to be the focus, and I've learned that over time, that that's what we see with that data. So that's a very good question, and by analyzing all of them, you might settle in on the one that you think drives the movement the most when there are more than one announcement at the same time. Very good question. Okay, everybody, thank you for joining. It's a good place to stop. So good luck with your trading the rest of the week. I'll be back at it next week with my technical analysis webinar, which is done on Wednesday evenings at 5 p.m. UK time, and then Thursday, same day, same time as this session next week as well. All right, everybody, thank you. Bye for now.